Yeah, so I'm just gonna go over a quick video of the charts lately in December. So we all know December is a really slow month. It's the end of the year. We're coming to the end of the year, so we're gonna markets do tend to slow down around Christmas. So I'm just gonna give you guys a quick overview of what the charts have looked like for December. So if we go here, we can see this would be the beginning of the 1st of December. I'm just going to draw a box over this. Now, based on what we see here, you can see gold is pretty much just ranging for December. My assumption is we're waiting for NFP, which is coming out on Friday, which is tomorrow. So, I mean, you can see the overall trend here. It was quite bullish until we had our news today, which caused gold to break down below. Even though we had positive news for you, positive news for gold. Gold should have went up, but unfortunately, gold doesn't do always do what the news results say. So we have pushed down, and now we are back retesting this most recent support on the monthly time frame for gold. So now that we have this little range that we're in here, what would you like to look for tomorrow or going forward? So, in my opinion, I would say I would wait for a clean break above these zones. So we have a zone here. I'm gonna make this a different color so you can see it. So we have this zone here, and we have a support. So this is our resistance. This is our support. Now that we have a resistance and support, once we break out, where can we go? I mean, for gold, we have a next resistance right away here. So, ideally we would want a close above here. So we know that gold is finally breaking out of this huge range that we're in, and we're finally pushing back to a bullish structure. However, the most likely outcome would be a stronger USD economics, which would mean gold will push down. So ideally, we would like this zone here to break, so we can push down and continue the bearish trend. As you can see right now, the trend right now, we had this bullish phase coming up to here. After this bullish phase, we pushed down. We created this support here. After creating this support, we pushed back up, created this resistance. Once we created this resistance, we came back down. We didn't manage to go all the way back down to the support area. We stopped a few pips before there, and we pushed up and back down, and we've just been raging ever since then. So the most likely outcome would be NFP tomorrow. Gold will give us a better idea of which way the markets would be moving. Um, we'll have a clear understanding if we're going to be bullish on gold or we'll be bearish on gold. However, we must keep in mind that it is December, and in December the markets are pretty slow. A lot of people stop trading early in December. For me, I will most likely stop trading after the second week or third week of December. So even though the markets are choppy, you can still make money and take trades. For example, I've taken a trade yesterday and today, and they were both wins. And the day before as well on Tuesday, so I've had a 3-day win streak. So how would you trade in this range? So let's break it down. Let's break it down on Tuesday. So on Tuesday, when I came to the markets, this is my indicator for Asian session. So I know the highs and lows of Asian session. So when I came to the markets on Tuesday, I saw at 6:45 we made this resistance here. Let's make that a different color. So after making this high, after I saw us make a resistance here, this was at 6:30 a.m. I don't usually take my first trade until 7 a.m. 7 a.m. is 1 hour before London Open. I noticed that we had these two candles here, one, two, these two candles with big wicks rejecting this area here. So in my mind, I knew that if we're rejecting this area, it is a mini support zone, I would say. So for me to take a sell, I would like a closure below this area, or a strong bearish candle closing below these wicks, or near the bottom of these wicks, and that's what we got right here at 7:30. So my entry candle was, as soon as we broke the lows of this bullet bearish candle, and I've noticed we had clean range. Our clean range came down to, I would say, here, because this is the next messy zone. So for me, let's measure how many pips that was. That was 20, around 30 pips away. So I'm happy with a 30 pip range. I can take that trade, and I could easily keep my stops above this breakout candle, which was 23 pips away. And that helped me minimize my risk and aim for a slightly bigger TP. My TP on this trade was 20 pips. I played it safe and I closed that at 20 pips. So I pretty much had a 1-to-1. And now if we move on to the next day. The next day, when I came to the charts, 6:15, 6:45. So I came to the charts, I saw Asian session was bullish. Even though Asian session is bullish, most of the time in London we do get a reversal of Asian trend. So we can see this mini range we've got here. We've got some range going on, candles printing side by side. Nothing really happening until we get this strong bearish candle at 7 a.m., which is 1 hour pre-London, closing below this messy range. After seeing that candle, it was a clear sign to me to take a trade. I took my sales once we made a little top wick and broke the lows. My stop loss on this trade was 30 pips, and I was aiming for the next support, which would be right here for me. Here. Okay, and that the distance between entry and to the next support was about 30 pips. And that was a clean 30 pip range. So I took that trade. I closed my trade out in 20 pips profit, and I called it a day. And now if we come on to Thursday, which is today, when I came onto the charts, here it is, 6:30, 6:45. I noticed that we had a support here and a bit of a messy range in Asian session. So a messy range in Asian session means that there potentially could be low volume in London. So once I came to the charts, I noticed that we rejected this strong resistance area, and we had a 60 pip push down. So after a 60 pip push down, generally I would expect the markets to pull back a little bit. So based off that idea, I took a pullback trade, which was a counter trend trade, and once we had a bullish close at support, so you see this candle here, it made a bottom wick, it retested this support area, came back up, it closed bullish. My entry was on the next candle. So here you could take two types of entries. You could take a riskier entry where you'd enter on the break of a bullish candle, or I waited for the break of a bearish candle to the left, just to give me a little bit more confirmation that we can push up a little bit more. So in total, that trade, my SL was 33 pips. We pushed up a total of 20 pips, but I closed out at 13 pips, which is right around here. The reason for closing out at 13 pips is because it is a counter trend, a pullback. So when you're trading a pullback, you don't want to aim for home runs. You want to take a quick trade in and out. I quickly took my 10 to 13 pips, closed it, and got out. But when you're going with the trend, you can take a longer trade. So an idea of going with the trend would be, we had this messy range, and then we finally had a strong bearish candle closing, and then you could enter a sell to go with the trend. And if you had kept a an average of 30 pip stops. So somewhere like here. Yep, somewhere like here. And then you aim for a breakout and 20 pips. Where would your next zone be if you're aiming for a breakout? Personally, my next zone would be here, these few wicks here. So it looks good. And that would have been your pro trend trade, which is a lot safer. That total push was about 40 pips, so that was a good trade to take as well. And you could have taken that too if you wanted to take a pro trend trade rather than a counter trend trade. So yeah, that sums it up for trading within a heavy range. Even though we are ranging heavily on gold, we can always find some little scalps that we can take, which I've been taking throughout the week with my community on Discord. So if anyone's interested in joining or any information on how I trade, just drop me a DM.